The broadcast is now starting. All attendees are in listen-only mode.
This is Christine Langley with the Wyoming Women's Business Center, and I want to welcome you to Understanding Your Profit and Loss Report within QuickBooks. The Wyoming Women's Business Center is a nonprofit organization that helps people who want to start or expand small businesses, specifically in the state of Wyoming. And so we do that through three distinct programs. The first is business training and one-on-one counseling. The second is our access to capital programs through microloans and individual development accounts. And lastly is our Professional Artist Development Center. So this QuickBooks training series is brought to you by our microloan program, which was started to provide access to funds for those unable to get business loans through traditional means. And so if you'd like more information on our microloan program, please contact Waldo Smith. And now I'd like to turn it over to Cade Reynolds with Capital Clarity Company. Welcome, Cade.
Thank you, Christine, for having me. So, as Christine mentioned, today we're going to talk about understanding your profit and loss report. So with that, let's get started. So we want to start with what is a profit and loss report. And so after you did all your bookkeeping in your QuickBooks files, you'll be able to generate this. And I think this is kind of a bold statement. It says, shows how your business sales proceeds less your business expense, and that is your net profit and loss. So I think if you look at it that way, you want to monitor this report to make sure you're bringing in more than you're spending out. So that's kind of the big, or understand why you're spending out more than you're bringing in. So that's the big thing there. There's three major areas. There's income, there's cost of sales, and there's operating expenses. Income, those are coming from your sales of products or sales of services. So in that realm, depends on what business you're in. If you're service-based business, product-based business, but that's kind of your main income sources. And then cost of sales, that's kind of your direct items. So that are tied to that sales of products or sales of services. A lot of times it's more in a sales of products business that you would have cost of sales, and that's inventory generated. So what is the expense of this inventory? What is the expense of the direct labor if you're a construction company or something? I mean, there's a million different scenarios of what can go into this, but that's kind of the idea of cost of sales. It's more direct to the product or service. Operating expenses, that's indirect expense that incurs to the business. This might be rent for the office or depreciation, etc., that isn't directly tied to your cost of sales. So with that, I think that kind of gives a good understanding of the three major areas of profit and loss. There's one other brief area that there's some other income and expenses that you'll sometimes see: interest expense, gains, losses, that kind of thing. But most of the things you need to look at are these three major areas on your statement. So with that, we're gonna switch over to QuickBooks Desktop, and we'll take a peek at a profit and loss. So you just pull that by going up here to reports and then profit and loss statement. And so now we're in here, and I think one of the important things to look at here on one of these reports is to make it a comparative. So compare this period to last period. Now that might be last year but in this scenario, we're going to do this month to date versus last month. So in that scenario, we got trends we can look for. So I always like to just ask questions. Why is income going up? So we double our revenue this month. We have 13,000 last month, 25,000 this month. Does that make sense? Now, whereas this kind of a example business, I don't have a real reason, but in your business, you would be able to say, yeah, we did that much more work. And then in this scenario here, you look at it and you say, why didn't cost of sales go up relative with income? So it looks about similar to what it was, and we doubled the income. So you look at that and you try to analyze that gross profit trend and see, hey, where are things at there? And then you want to look down here and you want to say, is there any other expenses that went out of whack? So, I mean, payroll expense increased. So if you look at that and you would say, man, that really doubled. So is it really worth it, you know? And then look at the bottom line at the end of the day and say, so month over month, we're doing the same, about similar amount of net bottom line. So that's just kind of the look at trends in this, and that's my biggest advice in regards to a profit and loss. Now I'm gonna switch over to QuickBooks Online real quick, and I have an example in here of something that there's an actual one that was messed up. So in this sample here, we got profit and loss, and we're gonna do last month or this month, and then we're gonna display it against last month. So now we have this going here. So in this one, again, trends, I would say total income is down a bunch. I would ask why if I was analyzing this profit and loss report, whereas cost of goods went up. And then here you look at this and you say, wow, rent. You can always drill into these items, like what was this? So you might want to drill in, you might want to look at sprinklers and say, what caused that? But in my example here, and you can always drill in further as well, but I'll show you that on this example. In this scenario, this expense seems, it's pretty large. What was that from? So I would look at that, and then I would see, oh man, we have 3 transactions and 2 of them in the same amount on the same day. So at that point in time, you might, if you were to make a correction there, in this scenario, these 2 were duplicated. So you'd be able to just drill in, and then you'd be able to delete one of these because it was a duplicate. Now, know that this is always scary in a way, but it's a good check, I guess. Don't ever get in the habit of deleting, I guess is what I want to say, but know that sometimes it's mandatory and you would need to fix something like that. And in that scenario, it really went up in cost, so we wanted to fix that. So that's kind of the high level of a profit and loss. You want to just understand where your money's going, make sure that the categories seem legit, understand where the expense is. If you got accounting expense, you would want to make sure that is truly what it was and make sure that it's classified and as clear as it can be. So that's the big thing, understanding, and then look for trends account-wise. You could even say automobile expense. We went this month, we doubled it, and understand why is the biggest thing. So with that, my advice, look at the trends and understand your gross margin. What is this cost of sales and your income at that point in time? So with that, we're going to switch back to the PowerPoint, and I'm going to turn this back over to Christine. So thank you.
Thanks, Cade. So the Wyoming Women's Business Center is made possible through several partnership agencies, and our primary funding comes from the United States Small Business Administration and the Wyoming Business Council. And so we're thankful to their support and others. If you have any additional questions, this is contact information for business counselors at the Wyoming Women's Business Center. Our counseling is always free. We encourage you to reach out. If you have questions about the microloan program, again, please contact Waldo Smith. Thanks everybody for joining us today.